And I think what we really saw today was they were able to end their fiscal year on a high note. That's really been a culmination of a lot of effort to streamline and improve their business. They've been very inconsistent in the last few years, so it is a little refreshing to see that they finally seem to have gotten their arms around some of the problems that they were having and seem to be on a very good trajectory going forward.
Talk to us more maybe about the inflation picture, because it looks like Tyson's second largest source of revenue, actually demand for chicken actually improved because consumers were looking for those cheaper alternatives to beef. So what do you think this tells us about inflation right now?
It's a great question. And with regards to inflation, there's a dual effect that Tyson has. The first is because they are so big in chicken, it's obviously a benefit to them. When people are trading down or they're seeking cheap protein to put on their table, chicken is a big answer to that question. And Tyson is definitely reaping the benefits of that. A little bit harder and a little bit more nuanced is the impact that inflation has on their prepared food segment. That's on the things that you find in the frozen aisle, in the refrigerated aisle. Those are higher cost items usually, and they're a little bit higher margin for Tyson. So finding the right balance has been important as consumers look for those prices to come down a little bit further as well.
So what drives their business, Jen? What top line revenue drivers, is it kind of a GDP story? Is it something different than that?
It really is a reflection of where the consumer is, because it is really about where the demand is going to fall. When it comes to cost drivers for Tyson, they really benefit from lower grain prices. So when corn comes down, soy comes down, that's good because that's the feedstock for the animals. But the way that Tyson goes usually follows just the general consumer and where they're trending and how incomes are progressing.
Something earlier this year I thought was interesting, because I talked to you about kind of price mix when it came to another segment in the consumer staples category, when it came to consumer packaged good type companies. Obviously, if you look at Tyson's Food too, when it comes to those types of food, beverage, food product type companies that are distributing packaged foods and meats, how do you view kind of when you were talking to me earlier this year about promotional sales for a lot of these types of companies in the back half of the year, like buy one, get one free, different things like that, as far as what this shows us about maybe consumer spending and what a lot of these companies, when they are distributing these types of goods, how they're faring?
Yeah, it's a big topic for these companies. And so when you're looking at volumes, almost every packaged food company started this year saying they were going to grow volumes, and yet very few have actually been able to actually realize volume growth this year. And that's really because the shoppers have been so conservative on their spending, and they've been seeking deals. There's been a lot of pressure to run promotions, and so we've seen promotional activity tick up substantially in the last quarter, and in the second half of this year overall. And we're seeing more deals, more discounts, and all of that is usually coming at the price of the packaged food company, not necessarily the retailer. So that's good news for consumers who are looking for deals. It makes it a much harder process to manage for the packaged food companies. So for Tyson, part of what they've really been working on is increasing their innovation pipeline, things where they can bring new products to market and have a different price point for those. And that's a similar strategy to what a lot of these other packaged food companies are trying to do to just generate consumer interest in their products again.